What's up, guys? This is Carter Thomas with Coin Mastery TV Bull Breakout Edition. Happy Tuesday. Got some great stuff to chat about today. Now, first of all, I mentioned yesterday I'd have some resources for you. If you are interested in learning how to do more of this technical stuff, many of you are not, but guys over at the Chart Guys have been helping me out a lot. They've got a killer YouTube channel, first and foremost. They also have some courses if you do like to have that structured education. I took these over the last week or so. I think they're great. They're also giving 10% off to anyone in Coin Mastery. So if you go to coinmastery.com/chart guys, you can get that. You can go to this page. I get a small commission, obviously, but I really do like these guys. I've actually been talking to them a lot, and they've been helping me out personally, which has been super cool. And their YouTube channels have always been great. Many of you actually have watched their channels. So go check this out. The other thing they offer, which is actually on kind of a separate server system, is this alert system. And it's like on Telegram. And what it does is it gives you alerts based on a currency and specific things that are happening in the chart. So instead of like Blockfolio saying, oh, the price is below this, it says, this indicator just did this. And they explain to you, what that means and how to use it if you don't really know much about technicals. So it's nice for people that don't have time to, stare at the computer all day, but you want to get alerted, not about price, but about price action or things that can influence price action. So it might say, hey, this is oversold on this chart, which is a really good indicator that it might, be a good time to buy it up because it's at a low price or whatever. So if you're interested in that, you can go to coinmastery.com/alerts. Again, this is like a separate system, but I get a commission on this either way. So if you want to hook me up or help me out, that'd be great. If not, you should just go check these guys out anyway and see what they're up to. They're doing good stuff. If you use the promo code MASTERY, all one word, you get 10% off both of these things. I'm not sure if it shows up in the checkout on the alerts, but you will get 10% off. So anyway, that's a resource. Go check it out. I really like these guys. They've also just got a killer YouTube channel. They give away a lot of stuff for free. Great people. So anyway, back to action, back to domination, let's chat about what is going on in the world of Bitcoin. We're also talking a lot about a follow-up on what we talked about yesterday with liquidity. I got a lot of people that emailed me questions. I tweeted about it a little bit, but I want to spend about the last 10 minutes doing Q&A of people that emailed in, and hopefully I can just directly answer some questions around liquidity and tokens and SEC and what's getting listed and everything else. And I also want to look at a few other pieces of the puzzle in terms of this as we march towards, hopefully, what this turns into a reversal, what that means, right? How do you make your next move? How do you plan for what could be the future? Now, we just, this morning, actually, had a pretty quick bull run. I'm just looking at the Bitcoin hourly chart, or a Bitcoin Bitfinex chart, I should say. Reason I'm using Bitcoin Bitfinex is because of the volume. Let me move this over here. And you can see that we had this huge spike up. Now, we're really zoomed in right now. I'm just going to show you the thing that I've been looking at. I was looking at it most of the day yesterday. So I try to keep things really simple for now. And then as I learn more about all of this stuff, I kind of add on to the different things that are involved. But I was looking at this resistance level, specifically this big drop over here in the chart. If anyone's listening, this is from the 14th of March. It was a big drop. And then over on the 16th, we kind of had this big hump that was a big resistance zone. And we kept pushing and pushing and pushing on this resistance. And to me, that was a very clear indicator that if we were going to break out, it was going to be somewhere around this line. So if you are a trader, which some of you are not, but if you are making a decision, often you can set your orders right around this price and then have really tight stop losses so that if it hits it, but it doesn't break through, you're in and out, you don't really risk a whole lot. And then you can get really You can take it to the next level and you can start to draw some triangles. This is obviously very, very, very crude drawing right now. I know this is not lining up perfectly, but this is, what you start looking at, ascending triangles, which is a bullish pattern, right? This kind of follows a lot of what's going on. Now, the other option was that this bounces up, and it may still do this, where it comes back down, retests this green line, and then we're off to the races. But no matter what, this breakout, in my mind, looked inevitable. And now we see if the same thing happens with this next resistance area to clear out this part of the chart, right? And so this really just comes down to watching the volume, watching the RSI, seeing how this works. So this is a super zoomed in view. This is the kind of stuff that I've been trying to learn over the past week, and it's been effective. I mean, it's definitely been profitable for me to do it. So it's been fun to do. And as always, we zoom out, we see where we're at. This is obviously a good sign. The next huge area of concern or analysis, maybe better word, in the future is going to be as we get up to this 10,500 area, as we get close to this downward trend line. This is the real test of whether or not this is a true bull run breakout or not. And it may seem like that's waiting an eternity, but from a purely technical standpoint, that's what it would be. It's if you break out and confirm across this line that is like the downward diagonal line from the peak to the other highs, breaking through that. All right. So that's where we're at with Bitcoin price. Until we get to that point right there, this is all just short-term trading stuff. And that's why it's not like, oh, we're in a bull run, oh, we're in a bear run. You can't make a clear call on this because there is no clear confirmation on the overall trend. It's just like a short-term thing. All right, cool. So that's where we're at with that. Just refresh to get the most recent data over here on CoinMarketCap. We're up to 342. We're watching Bitcoin dominate per usual. And we're seeing altcoins continue to outpace Bitcoin's growth, which is no surprise here. But compared to yesterday's breakout, we're seeing the numbers drop, right? Yesterday we saw this was like 20, 30, 40% better than Bitcoin. Now we're looking at 5, 6, 7, 8, 9% better than Bitcoin. You see this start to flatten out. There's no big surprise here. Remember that every time Bitcoin has gone up or down very, very fast, the altcoins kind of mirror that. But as it goes up slow, altcoins relative to Bitcoin go down more quickly. So as Bitcoin continues to move up, but it goes at like more of a sustained rate, altcoins lose their strength. They can't keep up with that sustained volume. And so you start to see what happened the second half of last year, as opposed to an alt season where alts exceed Bitcoin's rise. So keeping an eye on this, I'm personally not, I'm just not that aggressive on anything other than Bitcoin right now. I think that altcoins, they are what they are, but I don't know. It's just there's so many unknowns right now that to me, Bitcoin, maybe Ethereum and Litecoin to a certain extent are really the ones that I'm focused on because I'm focusing more in the short term from a trading perspective than I am focused on these altcoins, other than potentially auditing them for a portfolio, which is what many of you had questions about yesterday. Now, before we get into that, I thought this was a really interesting article on Cointelegraph, and there's a lot about this that I would love to hand this to like a Nate Silver. If you don't know Nate Silver, he worked for the New York Times. He famously was the statistician who predicted some insane number of counties correctly in, I believe it was the 2008 presidential election or 2012, one of the two. And then he got completely wrong in 2016. But he now works with ESPN and helps with that sort of thing. But anyway, he's a very famous statistician. And I would love to see him look at these survey results and talk about like what's like actual, not correlative, but causational data. Meaning, many people looked at this this survey that was taken by, who was it? Blockchain Capital. That like 8% of Americans own cryptocurrency or something like that. I can't remember exactly what it is, which is all fine. Like, that's a great headline. The reason I'm showing you this is because this lists off the reasons why people don't own cryptocurrencies. If you're listening on the podcast, it says like there's no need, or they're disinterested. It's too high risk. It's too complicated. It's a scam. It's a bubble. It's too difficult. There are too many fees. Whatever. And it also lists it by what generation: millennial, Generation X, baby boomer. This, in my opinion, is a very, very helpful data point, because over the next month, 1 to 6 months, these are the, what are they called, objections in marketing that you need to overcome in order to get people to buy into crypto, both mentally and then with fiat. And the first thing when in sales is you gotta know who you're talking to, right? Like, you gotta know your lead. And if you're talking to a baby boomer, you need to address what their biggest concern is. In this case, based on the survey's data, it says there's no need, or they're not interested. Versus, I guess that's true for everybody, but for millennials, it may be a little different if you're talking about, let's call it, what's high for them? It's too complicated for millennials, but it's not too complicated for baby boomers. That's kind of counterintuitive. I wouldn't really think that. You can lead the conversation by showing people why it is that they should be interested. And that's the key, right? It's not about telling people stuff. It's showing them. That's the key in any sort of conversion or convincing or influence. If you want to get into sales strategy, you don't tell people stuff, you show it to them. And so you can use this list. And the reason why this is important to each and every one of you and to me is because while we sit here and we look at the Bitcoin charts and we look at the altcoin charts and we try to gauge what the next thing is and what the future holds and when the next alt season is and all that good stuff, the fact remains that the only way that any of that stuff happens is if we get massive amounts of new people into the economy. Institutional money will help legitimize it, but most of that money is going to be OTC. Some of it might be on exchanges, but it's not going to affect price nearly as much as it's going to affect the overall growth of the industry, right? Whereas retail buyers do go on the exchange. They do buy the altcoins at market rate. They do drive the price up. The demand is on the exchanges. That is why this is so powerful. I think it's such a critical principle to remember. The only reason price goes up on any of these coins is because more people are buying it than selling it. That's it. The demand, like supply and demand, that is the only reason why price goes up. And if there's not more people buying, or if you and I are not putting more money in, the price will not go up. There's not some magic thing that's going to make it go up. It's just growth, period. So this can be very helpful. This is a good example of reading headlines, but thinking about it in a way that can benefit the entire, like the ecosystem. How can you use this? How is this valuable to you other than having something clever to tweet about, in my opinion? All right, cool. All right, a little water here. So many people, I probably got more emails yesterday than I've gotten in a very long time about liquidity. Because yesterday when I was talking about one of my biggest, not only concerns, but just things that I am definitely thinking about a lot of is liquidity and how important I think liquidity is. And the obvious question that comes from that is, what tokens will have liquidity? Specifically around like what tokens will be available, what will not be shut off. And I put a tweet out about this. I'll link to this on Twitter, where I give a very loose example where the idea is that the United States decides what tokens are viable on exchanges that can be audited and what tokens cannot be, right? We saw this with Bittrex very recently. They just delisted 80 tokens for, obvious reasons, right? Like they're obviously talking to the SEC and the CFTC about this sort of thing. And so once US exchanges become compliant, they become an ecosystem that plays by the rules. But then you look at exchanges like Binance and KuCoin and anything else that's based overseas that are listing all the other coins or that are not approved by the United States government. And that becomes, for lack of a better term, it becomes illegal to use those exchanges. Now, you may not like that. I don't like that personally, but it doesn't change the fact that it could very well happen. And a great example of this is Cuba. The United States couldn't buy anything from Cuba for 30 whatever years, 40 years almost. We couldn't even travel there, right? Like the United States can put embargoes, trade walls against places and things that do not follow our set of rules and standards. And tokens, in fact, are probably the easiest to enforce and track more than anything, because there's no you can't sneak through customs. It's all on the blockchain. It's all public information. So I think that's what I'm thinking about. And because that's how stocks are in many ways. Like, try to go open up a brokerage account if you live in the United States, try to go open a brokerage account in Thailand or India or in Africa or even in Europe. It's not easy. It takes a lot of time and a lot of paperwork, and you got to sign you got to go through market makers, and you got to go through third parties. If you want to get exposure to those markets, you buy ETFs that inherently already have the exposure through proprietary holdings that have all gone through SEC. It's like there's different ways to do it. But that's what I'm talking about with liquidity. And I don't see a reason why the government in the United States wouldn't do the same thing for tokens. They're not in the business of doing new stuff. The government does not create new paradigms. They are in the business of saying what has been done before that works, and works as in air quotes, and what can we put this token thing, how can we box it up? And that, to me, is the most obvious way. Now, I'm first to admit that this could not happen, right? It could be like, hey, this is a global economy, rock and roll, go forth and conquer, or whatever. But I don't know, just based on the way that things tend to work out, I'm not sure that will be the case. Because if you didn't know already, if you use overseas exchanges for equities, crypto, for anything, you need to tell the government, the IRS, FINRA, that you have money exchanged or housed in those exchanges. Again, daily reminder that none of this is professional financial advice. Talk to your qualified accountant or attorney about this. But you need to declare that you held funds at Binance, which is located in Hong Kong, China, or wherever it's located. Right? You need to show them. You need to fill out a form for FINRA that goes to the IRS that says that I have money in those accounts. If you do, right? So they're already tracking all of this. If you don't fill that out, there is massive penalties. So make sure you go talk to your accountant about that before you file your taxes for if you had a Binance account last year or whatever. But these are the kind of things that most people just don't realize, don't think about. But it's a bigger deal. It could be a bigger deal. The obvious kind of retort to that is, well, decentralized exchanges are going to be the big deal. They're going to change it all. And that'd be great. I think I think decentralized exchanges will always have a place in the ecosystem. But I think there is a huge, giving a lot of credit to people who to be able to figure stuff out themselves, right? Imagine a decentralized exchange. Imagine if Binance had no support team. Imagine if you asked your neighbor to set up MetaMask and send Ethereum into MetaMask, and they go on Radar Relay and run that and then keep it on my Ether wallet through their Trezor. Like maybe that'll happen someday, but that to me is a huge leap to get 20, 30, 40, 50 million people doing that actively. I don't know. I think liquidity, which comes from centralized exchanges where everybody goes to certain places, will continue to be the dominant force in crypto prices. And then decentralized exchanges will have a place, but it'll never compare. So I would love to be proven wrong about that. This is just my opinion, and who knows? Now, the question that a lot of you brought up, which I'll read a few of these questions, is like, how do you know which ones? Well, the first thing I can tell you is that look at the United States exchanges. Look at Coinbase, look at Kraken, Bittrex, Gemini. Those are the big ones that are based in the U.S. as far as, hopefully I'm not forgetting anything. And look at what they're already doing. Now start at the top and you look at Coinbase, and they got obviously Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. All right. Then you look at the coins that are deep in through, like publicly through the regulatory process. All right. Go look at what digital currency group, Grayscale Capital, Barry Silbert, the whole deal, what they're doing. Ethereum Classic, they are building out a whole Ethereum Classic investment trust. They did the same thing with Zcash, getting a Zcash investment trust. Ripple has massive amounts of regulatory compliance built in through the hedge funds, through the investment vehicles, through the futures markets that are coming out in Ripple. Like the list goes on, where many of these coins are having products built around them that are institutionally getting the sign-off that they need. So you can go down the list, and I can give you a little cheat sheet. If you just go down the list of top market cap coins, especially the ones that have been around the longest, right? Like, I don't know if Cardano would necessarily fit in there because it's kind of relatively new, so to speak, or it's not quite as big. These, especially the ones that are US based, like Stellar's in San Francisco, Litecoin, Bitcoin, like Ripple's in San Francisco, they're all US countries or companies. That's a big deal. And so you can start to audit this. Do I know exactly how this is going to play out? What's going to get listed? What's not going to get listed? Of course not. But that's why I'm bringing it up, because would you rather start thinking about this now and have it not work out? Or would you rather not think about it now and have it happen? Some people would way rather have me not talk about this stuff and then kind of deal with it when it comes and hope that there's a solution. I tend to, plan for the worst, hope for the best, especially when it comes to money. So that's what I would recommend you do, is like dive into the top 30 coins. What are US based coins? How far along are they on the regulatory compliance process? XYZ. You can look up the Howey test, stuff like that. That's a good way to get it going. Last, tomorrow, Bitfinex is deploying a platform update between March 21st, between 8 a.m. and 1700 p.m. UTC. You can expect an interruption of approximately 2 hours when trading and financing will be unavailable. So Bitfinex will be down for 2 hours. Usually whenever they do this, they're implementing something new. I have no idea what that means. Could be good, could be, I don't know, right? Like Bittrex just put in True USD in addition to Tether. Bitfinex is a huge Tether thing. Who knows what's going to happen? Last time they did this, they're coming out with Ffinex and EOSFinex and all these things, and keep an eye out on this. At the very least, if you see any weird price stuff going on between these times, realize it's because no one's trading on Bitfinex on the actual exchange. But, a good heads up to keep. And now I'm going to answer probably just a handful of these questions, because then tomorrow, let's do a live stream. How about that? And I can just take your questions through that. So first question, what coins might be banned from the exchanges? Oh, we just talked about all that. Okay, those are like 10 questions in there, but I'm only going to Given that most retail investors are the fish being eaten by whales, and supposing that whatever the masses is thinking are probably been outthought by the big players, is it more likely that we won't see those lows? And it will be great to hear your opinion on logic and motives of that, or the price will be pushed deeper south. Okay, so the question is, because the market is controlled by a few people, is it more likely that this price will get pushed down even more versus the retail investors? And the short answer is not necessarily, right? I think that if this short, bull squeeze, for the lack of a better term, if this got enough money out of hands that needed to get hands out of, this price action could easily go up, right? There's a guy on Twitter, I can't remember his name, but he tweeted about how he's one of the top traders on BitMEX, which is a high leverage trading platform, and he dropped like $20 million worth of shorts just like that, and that's when the price shot up, right? So like he may have had a strategy, but it was kind of on a whim too. He's just like, all right, well, this is done. Like, I don't really care about shorting this anymore. So it's really hard to tell what the motives of any whales are one way or another. And realize if they are truly whales, it doesn't matter if it goes up or down because they're trading it either way. So if it goes up, fine. What really matters is how effectively and how rapidly they can change the price and how much volume they can move at the same time. So if it's easier for them to push the price up, they're going to push the price up. If it's easier for them to push it down by shorting and creating fear, they're going to do that. So the manipulation of the market really just comes down to the whim and what's most profitable for anybody who is controlling any sort of market. That's the same question. Couple questions, guys. Just a word of advice. I obviously love all of you. If you are going to email on a question, write one question and not like 70 questions under the guise of, hey, I know you're busy, but can you answer these 45 questions? Just FYI. Will there come a time when the price of utility tokens can increase solely on the basis of usage and therefore decoupling itself from the speculative market of Bitcoin? Yeah, 100%, right? I mean, you got to remember, tokens are not the company. The tokens just represent pieces of a company, of an idea. And so eventually, everything in cryptocurrency will look like a blend of the stock market and venture capital. So every token that you see or that you own will eventually have its own valuation based on whatever crypto asset valuation metrics are established over the coming years, right? As it's legitimized, as it's put on new exchanges, as there are SEC filings that require certain metrics to be presented. But yes, you will absolutely see a decoupling. Same way gold and stocks are very different, right? What NASDAQ is doing on one day is very different than what silver is doing on the same day. Same thing is going to happen. Second question is, everybody's talking about big institutional money coming into crypto, but it's not likely these institutions will use open exchanges to buy large quantities of coins and therefore not affecting the price at all. Where will a big hedge fund buy Bitcoin? They're going to buy it OTC. So you can look at companies like Genesis Trading. That's probably one of the biggest in New York. Genesis Trading also does OTC deals. It's a big kind of auction house. And so the problem is, though, that even with OTC, there's not enough liquidity. So if you wanted to buy, call it $100 million worth of Bitcoin, yes, there are brokers that could potentially help you with that. But let's say that they only had like $60 million worth of Bitcoin available. They would need to buy it somewhere, and exchange is a place to get it. Now, this is also why the derivatives market is so powerful. Index funds like the one in Coinbase is a little different because theoretically, not only do they peg it to the price, they could buy the actual underlying asset. But as you get derivative securities that peg to the price of Bitcoin, and people can buy that ETF, index fund, OTC fund, whatever, that's how a lot of this institutional money is going to get exposure to Bitcoin. and it's a combination of market making, of marketers, whatever it may be. But you always want to look at the precedent that's been set. In this case, gold, where the ETF market of gold is massive, whereas the actual market cap of gold itself, let's say it's 7 trillion, which is also pretty big. So there's different ways to get exposure. But right now, it's just done OTC. It's not necessarily going to increase the usage, the price of actual Bitcoin until there is a value in owning the actual Bitcoin. And the good thing about Bitcoin and many proof of work coins is that it's a scarcity model. There's only 21 million of them, or maybe call it 19 million if some of them are lost. And so eventually supply and demand will work itself out in that sense. But that's one of the big reasons. So that's a handful of questions. There was like 9 questions per email. So just to save you guys, let's do a live stream tomorrow. I'll email you about it. I'll post it on Twitter, probably around 10:30, 11 a.m. Pacific time. And you can tune in and we'll go through mostly just a Q&A because I know a lot of you guys have had questions recently, and we can just chat and see what's up. Again, I really do like these guys. Go check out the chart guys. Go to coinmastery.com/chart guys for the course. Use the promo code MASTERY, 10% off. If you like the alerts, go to coinmastery.com/alerts. Same promo code MASTERY, 10% off. And go check it out. Make sure you go check them out on YouTube too. They got some cool stuff. Great dudes. Happy to help them out. And with that, I will catch you guys tomorrow. All right, peace out.